Let's start off here with the net interest income here. I think overall, most investors were pretty pleased with that number. What actually led to that beat?
Yeah, no, we were pleased with the quarter overall, and I think what you saw in the results was just the benefit we're getting from higher rates. And as we looked at the earlier in the year, we were sort of trying to get a sense of how deposits were going to move, what kind of mix shift we were going to see, and what pricing was going to look like. And as we get better clarity throughout the year, we were able to realize more of those benefits than we thought at the beginning of the year, and that helped us increase our guidance for the year, up 16% versus the 14% we talked about in July. And I think you see that come through in the results there, net interest income.
Well, given the trajectory of benchmark rates and more importantly, some of the volatility in that path, when does this higher rate environment, if at all, and the balance that you, of course, have to have with your consumers, when does that start to work against you?
Well, I think you got to think of it in a little broader sense, right? I think the economy is definitely slowing as a result of rates coming up, and so that's having an impact on consumers. We're still seeing it be much more resilient than we would have expected at this point, but we're seeing good activity levels, but cash balances are coming down. And as the longer rates stay higher, our deposit costs will continue to increase like you've seen over the last couple quarters. Having said that, I think when you look at the overall mix of our business, we're very much weighted more towards the consumer side. Those are accounts generally, the majority of them at least, generally have smaller dollar amounts in them, and so you see a little bit less pressure from a pricing perspective there so far.
Less pressure from a pricing perspective. What is your base case scenario, Mike, for the cost of deposits? Has the process for raising the rates that you pay depositors mostly run its course? I mean, are you 70% of the way through, you think? 80%?
Yeah, it's really hard to know. I think that it'll be a function of where rates go from here, whether they go up further, whether they stay flat for a longer period of time, and so I think it'll really be that. But really where we're focused is making sure that we continue to do more with customers too, right? So you see that come through our credit card results, where we've got really good originations and growth in credit card spend, and you see that you're hopefully starting to see that in our wealth management business, and so I think hopefully over time we'll do more and more with customers to kind of round out the relationships there.
Right, gotcha. I got to ask you about bank capital rules, because that's something that so many of the bank leaders have warned about and have talked about. It hasn't happened yet, but I wonder what actions you'll have to take as preparation for this to happen. What steps have you taken so far?
Yeah, well, first, I think we come into this this rulemaking and environment in a really strong position. Our capital levels are high, and we're already at the level we need to be if the rules were implemented as written, today. Mm-hmm. So we come in with a lot of flexibility, which is good. Now, it's a complicated set of rules. It's going to take the better part of a year to finalize, and so and we're going to go rule by rule or section by section to make sure that we're doing the right things there. But it's a little early to start taking too many actions right now, but we do need to be cognizant of some of the places that are going to be a little more challenged as a result from a return perspective. But it's going to take some time to really play out, and we look forward to continuing to engage with the regulators through the comment period, and we're hopeful there'll be some changes made, but we're prepared to deal with whatever comes as when the rules get finalized.
Well, and I'm sure, as you know, Mike, this still kind of almost seems to be a rolling issue right now, because we still haven't quite figured out exactly what happened with the regional banks earlier this spring, and there's a lot of concerns about the commercial property market going forward, all things that I think would weigh into the decision as to just how much to impose upon the banks by regulators.
Well, I think you have to, take a little bit of a bigger, picture here. And look, the banks are in really good shape and overall. And I think when you look at, Wells Fargo in particular, I think we're in great shape. We have strong capital. We have strong liquidity levels. We have, good coverage against credit losses that are there. We have a smaller markets-oriented business than many of the other big banks. So we're maybe in a little bit of a different, position. And so I think you have to let it sort of play out. And I think, when you think about the capital levels that have increased in the industry over a very long period of time, it's been a lot. And so, how much more do you need to do from here, I think, is an open question, and we look forward to, engaging with them on that.
I am curious about some of the strategy changes that have taken place under Charlie Scharf, and I'm sure Jamie Dimon even gave a hat tip to his former protege a little bit earlier on his conference call. When you consider some of the moves that have certainly reshaped not only the revenue sources, or at least the percentage of revenue that you're getting from certain sources here, what becomes longer term the way you plan out to protect those businesses, or at least to set them up in a way where that revenue stream is sustainable longer term?
Yeah, well, it starts with having a really clear strategy of who we want to serve, and I think that's what we've been trying to focus on, and I know Charlie's been focusing on since he came to Wells, and I think you've seen us take a lot of action to sort of orient the businesses to what we think the strategies are, and then it just takes very methodical, disciplined investment in those businesses over a very long period of time, and I think you're starting to see some of the benefits of what we've done over the last few years, including our credit card business. We're seeing some benefits in our wealth business. We've been investing in our investment banking business as well by adding people, particularly in the last year and a half or so. And so I think you'll start to see those benefits come through. And that's the way you sort of set yourself up for success over a long period of time, is make sure you got the right capabilities, the right products, the right people, and you do that in a very disciplined way while we continue to fix all of the risk and regulatory work that we've got to get done. And I think that's what you'll see and what will set us up for success over time.